My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other big friends, I'm just trying to help you make some money. My job, not just entertainment, to educate, teach. Call me 1-800-743-CNBC. Tweet me at Jim Cramer. It's time to speak the truth about the Fed and its minions. Far too often people play what it's become actually an absurd parlor game of parsing every word out of every Fed official's mouth. Anytime someone mentions a rate cut, it's, oh, how many, when, where? You've heard it endlessly. But on a good day, Dow jumped 307 points. S&P gained 1.11%. NASDAQ pulled at 1.24%. I need you to understand that you don't need to take these comments so seriously. When Fed officials blather all the time, making projections, pontificating, each new speech is treated as gospel. I can't take it anymore. Most of the time, these comments are full of sound and fury, signifying nothing. They just aren't that consequential, but we sure don't treat them that way. Within the last week, I've heard that we might have 2 cuts, 3 cuts, 1 cut, maybe no cuts. There's no consistency from these people and no consensus. Fortunately, there's one member of the Federal Market Committee who takes a common sense approach to waiting to see how things play out before making any big decisions, and it's the guy running the show, Fed Chief Jay Powell. Would it hurt us to just emphasize him and stop the maybe 2, maybe 3, maybe 3-card Monty drivel? Because these other officials won't keep their trap shut, we get this guessing game where everyone tries to figure out what the Fed's going to do, even though their comments really don't give us much insight at all. But here's what you need to know. Investing is not, I repeat, not a game. You simply can't afford to take your cue from this nonsense. Why? First, because Powell is all that matters. But second, when it comes to stocks, as long as the rate cuts are in front of us, they can rally. Doesn't matter when, doesn't matter how many cuts. What matters is the Fed wants to be our friend. That's the takeaway. At this point, nobody knows how many rate cuts we're going to get. That's ridiculous. And that includes Fed Chief Jay Powell, although that doesn't seem to stop any of these pop-offs. You need to understand, though, that the period before the first cut is nirvana for the stock market. This is the ideal moment where the economy's chugging along just fine.
All aboard!
And we know we're going to get some relief from the Fed eventually. But by the time they actually start cutting rates, the economy will have slowed down, and that's not good for your portfolio. This is the sweet spot, people. Somehow people seem to think that the market can't go higher without rate cuts. That is just patently false. I go so far as to say that the whole dialogue about these Fed officials is just dead wrong. The parlor game of guessing when or how many is pointless. What matters is whether they even need to cut rates at all. Case in point, this morning we got a robust employment report with some fairly decent wage inflation numbers. If you heard from a Fed governor this morning, oh, I'm sure what they would have said. I know what they said. They said, oh, maybe 1 cut, maybe 2 cut, maybe no cut. And that's all anybody would focus on. But after such an encouraging labor report, the narrative should have been something like this. Oh, good. Good for stocks. The economy's still humming. We're going into earnings season with a strong consumer. There's no need for the Fed to do anything for the moment because business is pretty darn good. If we weren't more focused on these positives, people could have gotten a jump on today's terrific rally.
That was easy.
Yesterday, people blamed the sell-off on a Fed official who questioned the need for rate cuts, but that's not really what happened at all. If you simply looked at the timestamps of when that sell-off began, you'd see that it was totally in conjunction with the spike in oil prices, no doubt related to the latest scare in the Middle East. Yep, it was crude, the war premium, not the Fed speak that was almost universally credited or blamed for the action. False narrative alert! So going forward, I'm begging you to tune out this blather. It's hurting our ability to make money in the market. At best, it's a distraction. At worst, it's a misdirection play, and it won't go on here in Mad Money. Either way, just ignore it. With that in mind, let's go over the game plan of what we've got, okay? It's specifically avoiding the 7 Fed speakers, including 2 who speak twice, because you know what? They'll just send you in the wrong direction. Now, on Monday, we have I would call it the worst possible day for the solar stocks. It's a total eclipse of the sun. We're going to hear a lot about the drawbacks of solar power. Believe it or not, we actually will, namely that it only works when the sun's out. Hey, wind only works when it's windy. Personally, though, I prefer an alternative. I prefer energy focused on wind, not solar, and that brings me to GE Vernova with its gigantic service revenue stream based on windmills. If you want renewable energy, you got my blessing to leg into that one. It's just spun off this week from General Electric. Earlier this week, I told you about a group of stocks that I've ignored for years, and that is the cannabis stocks. I thought they're a waste of our time. But now that the Florida Supreme Court this week allowed cannabis on the ballot in November, it looks like we're going to take another major state coming out for recreational weed, assuming 60% of the people vote yes. If you want to bet on this, I'd go with Canopy Growth, CGC. It's almost a subsidiary of Constellation Brands. We'll talk about that in a second. Many traders prefer Tilray, though. I'm going to go back to a well that I have not visited in years, and I'm going to listen to the Tilray conference. I want to hear what they have to say about this Florida vote. Wednesday here, this is a number that we're going to hear about, and it's worth listening to. It's Consumer Price Index. This matters because if the CPI is too hot, there's a possibility that long-term interest rates will go higher, which is actually important. I'll be focused extra special on rent because we've still got a massive housing shortage in this country, and that's without even factoring in the impact of immigration, legal and illegal. We also get results from the airlines with the best set of financials, and that happens to be, at this point, Delta. I normally don't countenance buying stocks right before the quarter, especially the airlines, but with the travel boom very much alive, bolstered by this morning's rosy employment numbers, I think you actually give this one a try. Thursday, most important day when it comes to earnings for the Travel Trust, and that's because Constellation Brands reports. Yes, they sell. Do you know that this is the #1 beer in the U.S. by revenue, which is Modelo? They make it. Should have an excellent quarter, give us a good outlook. We know beer sales have been strong. The cash flow is bountiful. But Constellation still has to pay down more debt before shareholders can benefit much from it. You never want to be selling the stock so close to taking a mile, though. Friday, the real earnings season does begin, and it is the parade that everybody talks about. Yeah, it's Wells Fargo, Travel Trust, named JP Morgan, BlackRock, Citigroup, all reporting all at once. These financials are classic examples of what I'm talking about when I say it won't necessarily be good for the market when the Fed finally starts cutting rates. Why? Because you don't want an aggressive slashing of rates if you're a bank. Something like Wells Fargo, which we own for the Travel Trust, does well in a situation where rates stay higher for longer. The others aren't that different. Bottom line, if you only take one thing away from this screed I just gave you, it should be that you need to stop the fixating on the words of Fed officials. Stop worrying about how many rate cuts we're going to get and when or where or why or how. If you can't free yourself from this terrible parlor game, you're going to miss a ton of terrific investments. I'm going to start the questioning with Marcia in Washington. Marcia.
Hi, Jim. It's good to get to talk to you today.
Same, Marcia. What's happening?
Well, I'm a new member of the Investing Club, and I'm looking at buying some Best Buy, but I'm wondering if I should be concerned about recent insider selling.
Okay, Best Buy, first of all, thank you for being a member of the club. I like Best Buy because I believe we're going to see a radical refresh of PCs come this fall. And it's going to start in July. And people they're not focusing on this. They're making a big mistake. The PC refresh cycle is going to drive Best Buy higher. Meantime, you're going to be protected by the yield. I am urging people to get long Best Buy. Particularly club members know how much I like the stock. I'm trying to buy it and get bigger if it goes down. Brian in Connecticut. Brian.
Hello, Jim. Thanks for taking my call, and thanks for the great work you do with your charitable trust.
Oh, thank you, Brian. Well, I'm proud that I've given away more than $4 million. Thank you very much.
Thanks for giving back. Hey, Jim, my question is about AT&T. I inherited some AT&T back in 2016. Cost basis of original shares about $43 a share. It is tanked, and even with the reverse Morris Trust of Warner Brothers, it's still bad. What do you think about the management, the company, and the stock?
My Nana Mary always said, if you don't have anything good to say, don't say it. So let's go to, that's it for the calls. I want you to stop fixating so much on the words of Fed officials, people. Stop worrying about rate cuts or when or where or why. That's a terrible game, and it's going to cause you to miss a lot of terrific investments. Oh, made money tonight. Oil spiked yesterday, causing a sell-off, the likes of which we haven't seen since last year. So I'm going to review, going to my favorite guy, Rusty Brazil, to find out what the heck is going on with the price of oil, get a sense of where the market's headed. Then we're continuing our series on successful small caps by covering the healthcare space. I'll share you some names I'm watching as we put together a basket of great smaller caps. And this week was a humbling reminder to keep a diversified portfolio and help you withstand some volatility. So tonight we're playing MI Diversified to see if your portfolios can pass the muster of Cramerica. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.